and welcome. You're watching Business Today Television. I'm Sakshi, Batra. Well, it was the last day of the fiscal year 2024 and it's exactly been a stellar performance from the Indian stock markets, and this was backed by accommodative monetary policy, strong domestic retail participation, corporate earnings and the economic recovery post the pandemic blues. From 16,900 all the way up to 22,500 and above that, the benchmark index Nifty has climbed over 27% in FY24, while Sensex has surged just about 23%. About 41 stocks that are part of the benchmark index of the Nifty have actually given double-digit returns of up to 95% to the investors. Index heavyweights like Reliance Industries gave 28% return, while TCS gave about 20% returns this time around. Now, had it not been for the underperformance of stocks like HDFC Bank, the returns on the Nifty would perhaps been even higher. HDFC Bank has actually given negative return for the year FY24 to the tune of 10%. And joining it was also the FMCG giant Hindustan Unilever that lost close to 13% in this financial year. But how was the sectoral performance? Well, among the sectors, it was the manufacturing-related sectors, automobiles, capital goods, consumer durables, defense, industrials. All of these rallied pretty sharply, aided by the government's efforts to push local manufacturing, and public sector stocks were definitely at the top of the rank. Strong improvement in their fundamentals, attractive valuations drove higher participation by retail investors. At least one of the 5 stocks or 110 stocks from the BSE 500 index, that's the broadest index, have actually more than doubled in FY24, while the benchmark indices were set to report their best performance in the past 3 fiscal years. Of these 110 that I'm talking about, the top performers from S&P 500 index, nearly 1/3 or about 34 stocks are actually PSU companies. 4 companies, Tata Motors, Tata Power, Trent and Tata Investment Corporation, are from the Tata Group that led the show. 3 stocks from the Adani Group that outperformed included Adani Power, Adani Ports and also Adani Green Energy. On the broader end of the markets, when we talk about the Nifty Small Cap 100 Index and the Nifty Mid Cap 100 Index, they all outperformed the benchmark index, rising by 69 to 70% for the small caps and about 60% for the mid caps, especially for FY24. Now, the Nifty Small Cap 250 Index also has given about a 63% return in this fiscal year. When we talk about the combined market capitalization of the stocks that are listed on the Bombay Stock Exchange or the BSE Small Cap Index of 1,000 stocks, that has grown by 26 lakh crores or to now about 66 lakh crore rupees. And in this fiscal year, in the process, about 252 stocks or every 4th stock in the small cap index has given multi-bagger returns. Thanks to the stupendous run, the total market capitalization of all the companies that are listed on the Bombay Stock Exchange has soared by 125 lakh crore rupees in this year. That's a whopping amount getting added to investors' kitty in FY24. So what were the key catalysts for the equities rally? Huge liquidity flows into the market. Remember, after the outflows of about 37,632 crore rupees in FY23, foreign portfolio investors returned as buyers in the current financial year FY24, buying Indian equities worth 2 lakh crores so far. This was the highest FPI inflow since FY21, when the FPI investment stood at 2.74 lakh crores. This renewed interest from foreign investor boards for the Indian markets and reflects the growing confidence in the potential for the growth and returns in the Indian market. The market also saw introduction of 75 main board IPOs. Meanwhile, PSUs, realty, energy, PSU banks, autos, metals, pharma emerged as major performers. It was the realty index for the second year. Of course, 2023 as a calendar year was a stupendous one for the retail, for the real estate space. But even for fiscal year 2024, that was the top performing sectoral index. It rallied about 136% as far as this last fiscal year is concerned. all the sectors rallied. The lowest performing one also gave you 17% return. Nifty FMCG index in the last 1 year, if you look at the kind of returns that we've seen, is about 17 odd percent. But all the sectors really gave you handsome return. So there you have it on the screens. Of course, it was a choppy ride through the time, but again, about 18.5% rally is what we've seen for the Nifty FMCG. That was the worst performing, if you can call it, but still giving you 18.5% return. The rise in the FPI inflows really came in on the back of improving macros, declining inflation, hopes of rate cuts coming in the current calendar year, and the possibility of incumbent government also returning with a third term after the general elections. Moreover, record performance of the Indian markets throughout the year was buoyed by investor confidence, robust financial activity, and positive sentiment all across. In fiscal year 2024, the Indian headline index outperformed several major global peers as well, including the Dow Jones, the Euro Stoxx 50, the FTSE 100, Hang Seng, and even the Kospi. But where it lagged behind, the domestic indices were behind Nikkei, that of course rallied and surged to record high levels, of course, Nasdaq, which of course saw a stunning move too, S&P 500 in the last fiscal year. If you see, these are the indices behind which the Indian markets were seeing some performance. But all in all, it was a fantastic year of trade for investors and traders alike, with the broader markets also giving a handsome show this time around. The question is, how will FY25 now pan out? Well, there are mixed views coming in at the start of FY25, which we're looking at from the 1st of April, because of course the activity around politics will also heighten up. Election talk will be heightened. Then we'll be looking at comments from central banks across the world. In our own country also, RBI will be starting to look at how does it want to maneuver its way across around inflation and on the interest rate fronts as well. And of course, we still have monitorables on crude. There are wars that are still taking place. There's no end to that one as well. So those will be some overhangs, but all in all, it looks like the markets are set for another financial year that could be a rewarding one for investors, albeit some caution where markets have actually had a stupendous run in a short period of time. Specifically when it comes to the broader markets is where some bit of caution is already being talked about. Stay tuned to Business Today TV as we tell you everything that you need to remember when you start your journey in stock markets for the new fiscal year.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I am Sakshi Batra and with me somebody truly special, and you wouldn't be expecting this one. With me is Mr. Chetan Bhagat. He is the biggest English language novelist of India.